Good morning, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is September 13th, 2022. US CPI came in hotter than expectations, and that has the markets moving, with stocks moving lower, bond yields moving higher, and the dollar moving higher as well. Let's take a look. Starting off, taking a look at the dollar versus yen, the price low came in around 141.61. That was a 38.2% retracement of this moved up from the August 26th low to the high that we saw on September 7th, 38.2, 141.61. That's where the price bottomed today. We opened, or during the CPI, the closing level, or the level was right around here, around the 200-hour moving average, and we shot up, moving above the 100-hour moving average in the process. We are off the low, or the highs from last week, which came in at 144.98. Maybe we look at the other target levels, including this area right here, where we had to swing high, and swing high. So that that area comes between around 144.38 and 144.60-ish or something right there, 56. So watch this area here ahead of the extreme as the next key target. Really not a lot until then. On the downside, we got to stay above the 100-hour moving average to keep the bias more in the upside direction. The euro versus US dollar, that fell sharply as well. And this area right here, through here between 1.0095 and 1.0121, I'm going to switch over to the daily chart. Don't be shocked. That represents this box right here, where the markets consolidated. We've been talking that for a while. And also the high of this box right here, where the market consolidated and used that level as a high. So we had this as a low and this as a high until we broke to the upside yesterday and moved up to test this topside trend line. Only find sellers against that level. And today we did the same thing again, and now we're moving back down below this this key swing area now between these two levels. So that's going to be resistance. The resistance on the top side, we can't move back above that level. We have to stay in the lower box again. We also fell below the 100-hour moving average here at 1.0054, and the 38.2% retracement of the move up from the last week's low to this week's high. So these levels right here and here will be closer resistance for the euro versus US dollar, but ultimately staying below this level is now the new norm, the new ceiling for the pair once again. Taking a look at the sterling versus US dollar, and this pair also fell sharply after going up to test the 38.2% retracement. Let me just put it on the 4-hour chart here briefly to see of what that move is. So this is the move to the downside, 38.2% retracement, and top side channel trend line here. I don't know if it's trend line. Looks, these things, yeah, these are converging here. But this top side trend line near the 1.17372, that stalled the rally. I'll go back to the hourly chart because I want to show the move below the 100 and now testing down to the 200-hour moving average of 1.1558. Move below that level, and looks like we're testing it right now. Would increase the bearish bias. Risk levels now come against this yellow area, which defines swing low, swing highs, swing high. You know, you get the point here. We moved above it here, we moved above it here and failed, came back down, and we based against it before moving up yet and trading yesterday. So this area right here and the 100-hour moving average are going to be now resistance for the sterling versus US dollar. Taking a quick look at the dollar versus Swiss franc, that came down to test its 100-day moving average. Buyers came in against that level and pushed the price higher. That was just on the last hourly bar, and now we're seeing the price rotate fairly quickly to the top side into this swing area through here, where we had swing high, swing high, swing high, swing high, swing low right here, swing low, swing low. Failed below it here on some news. I think it was the PCE data or something like that, and then the Fed Jackson Hole moved back above the 200. And in trading this week, the price traded above and below it here, but the last thing that we did yesterday was find resistance against that level and push to the downside. So getting above the 96.05 level and would be step number one for this pair. I'm going to put a Fibonacci from the high to the low here to measure that out, and take this one off just for giggles for now. Okay. There we go. The 38.2% retracement would be another target, as would the 100-hour moving average. So get above the 96.05 level. Target's 96.28, 96.127. Yeah, I got to use this level at this area as the support now for the dollar versus Swiss. Quick look at the dollar versus Canada. It's moving back above its 100-hour moving average after testing this swing area. So that's more bullish, and moving back to this area right here. You have to go to the 4-hour chart to see the importance of this swing area between the 130.72 to 130.94 level. Swing high, swing high, swing high, swing low, swing high, swing low, swing low. So get above that level is more bullish for the dollar versus Canada. You can see the levels there. And the Aussie versus US dollar is moving down to test its 100 and 200-hour moving averages on the downside. We are seeing stocks move sharply to the downside. The Dow is now down close to 500 points. The NASDAQ is down 343-ish points in pre-market trading. In the debt market, we're seeing yields move higher, with the 2-year up at 12.3 basis points. It was down around 4 or 5 basis points before. The 10-year yield is up 4.6 basis points, and the 30-year is up 3 basis points. The terminal rate has moved up to 4% to 4.25%, and or 4% dash 4.25%. That's the expected terminal rate now. It was below the 4%, 3.75 to 4%, so that's moved up 25 basis points. And again, the expectations of the Fed hiking by 75 basis points is assured now for next week's meeting. There may be a chance for 100 basis points. Who knows? We will see how that all plays out, but the markets are under stress as the CPI data comes in stronger than expected. My name is Greg Wenkolowski. Good fortune with your trading. Bye-bye now.